Hello, lovely students. Welcome to class. Today we are discussing a very interesting topic, the double entry. Now, what do you mean by double entry? It is a way of recording or posting business transaction 2 times. The double entry system simply seeks to record every transaction 2 times in the principal book of account, which we call what? Ledger. Now, what is the ledger? It is actually the main book of accounts, which is regarded as the principal book of account. We use it to record accounting transaction twice. The left-hand side is known as the debit side, as you can see indicated by DR here, while the right-hand side is known as the credit side. Now, what are the classes of ledger? We have 2 broad classes of ledger, the personal ledger and the impersonal ledger. The impersonal ledger is further divided into the real account and the nominal account. Now, let's look at each of these classes and types of ledger so that you'll get a deeper understanding of them. We start with the personal ledger. We can call it the personal ledger or the personal account. This is the kind of account that is kept in the ledger with names of individuals, firms, or companies who may be suppliers or customers to the organization. For example, we can have John's account, we can have Stacy's account, we can have Osas Limited account, and all other examples that you can think of. Now, the real ledger or real account. This refers to the kind of account that is kept in the ledger relating to tangible things. When we say tangible things, we are referring to things that you can touch. For example, we can have building account, motor vehicle account, stock account, and what have you. Now, the nominal ledger, or we can call it the nominal account. They are the kind of account kept in the ledger which relate to the gains or losses within a trading period. When profits are made or losses are incurred in the course of a business transaction, we register such in this kind of account. For example, rent, discount, wages, salaries paid, and what have you. Now, from what we have seen so far, you notice some abbreviations. There are some important abbreviations that we're using in accounting and, of course, here in business studies to represent different things. The first one here is the debit, which we are representing with DR, and credit is CR. B/D refers to brought down. B/F refers to brought forward. C/D is carried down. A/C means account. SL means sales ledger. CB is cash book. PL is purchase ledger. And P and L refers to profit and loss. So please note the difference between these last two. PL is purchase ledger, while P and L refers to profit and loss. Now let's proceed to assets. What do we mean by asset? They are the things or properties used by the business for its day-to-day running. Those items you are using for the daily running of the business are known as assets. We classify them into fixed and current assets. The fixed assets refer to those buildings, structures, furniture that you are using, while the current asset refer to things like cash, whether in bank or what have you, that you use for the daily running. Now, what do we mean by liability? Liability refers to the debts the business owes to other people or firm. An example of liability is a loan. If you take a loan from a particular firm, that is regarded as a liability, or other debts. Now, another important term you should take note of is capital. The capital refers to the initial startup materials that the owners put together to start up a business. So examples of such are cash or assets that the business owner bring together to start up the business. Now let's look at how double entry treat these different items we have seen. For assets, increase in assets are debited, while decreases in assets are credited. Unlike liabilities, where the increase in liabilities are credited, whereas decrease in liabilities are debited. Then we'll move on to expenses. Like the assets, increase in expenses are debited, while decrease in expenses are credited. Then let's look at the capital. Like the liability, increase in capital are credited, while decrease in capital are debited. What it simply means when we say credited means we are recording it at the credit side, which is the right hand side. When we say debited, it means they are recorded at the left hand side. I believe you understand what we have seen so far. Thank you, and see you in the class. Bye.